Bull. Wow. Good morning, everybody. Jack Leeson with StartupTrading.com. It is April 4th, 9:10 in New York. And the large daily targets are hit here as we go into the open. We've been talking about those higher time frame targets coming into play, and yeah, here we are, 18,478. We're going to be opening below then, but I do want to back out here. I'm just going to remove the studies from my screen, let it be clean. There was a very large extension in the NASDAQ. The ES had a full traditional, but the NQ, just deleting some old drawings here, the NQ had an extension, and the downside target of that extension was 18,478. Now, typically markets capitulate in panic, and we really, believe it or not, had not seen any panic in any of this move down. I mean, they were big moves, but this is panic, okay? This is what panic looks like, okay? Panic looks like 2,000 points in 3 days, full on liquidation at targets, and that's what you get on these short targets since this anchor began. And we'll draw it to the new low. If we were to rally, it actually would be completely normal, and I would not be surprised whatsoever if we rallied all the way back up right into this extension again, at least at 38% retracement, and that 38 would be 19,394. If that trades next week, or even the 50% retracement at 19,900, would not be surprised. We were there 3 days ago, but that 38% retracement, would not be surprised to see that hit next week or the following week. We will snap back into this anchor again. Now, the question really here today becomes, can we hold below the new extension? Or if we develop here the low from March 11th to low, and I have a trend line as my tool, that would be, something I am going to be paying attention to today. If once we start squeezing above that, then I think we can end up with that bigger squeeze. Now, if you guys remember earlier this week, we had this full halfway back short on Wednesday. And what was interesting about that halfway back short is that was, Liberation Day, as it shall be known. We at the same time had this halfway back long that started the day. We drove higher, completed targets. The high of the day was very close. This draw is a little off, but the high of the day, come on. It's hard when I'm this zoomed out to grab this low. All right, close enough, whatever. The high of this day during the regular trading hours session was that profit target, and then there was another extension in here which we went over, and then that high was also a target. So what was interesting is we were kind of inside of a short setup. We broke the short setup though, and our highs were targets. Our highs were not technically short setups, they were profit targets. So which shakes a lot of people out. I mean, if you got your stop at that 61, I mean, that's what this move is. And it was a total sweep of stops and just an absolute massive move down. The biggest I've ever seen at that time of day point wise. Never in my life have I seen a move. I don't know when the next time we will see a move that big in the after hours. And of course, that's pushed us here down to and through targets. But moving forward, we're also going to want to be paying attention to, I'm not going to draw from that daily high. I'm going to draw from where that 50% is to low. And that would be a next setup. Now, who knows? We may not even have, I think we could definitely just base inside of this. Anything can happen in these markets, which, the last few days can show you there's no predicting where the market is going. It's just support and resistance, and then paying attention to how we're acting off of those. But I do want to pay attention to like the higher time frame here. I'm talking, a 10-year weekly chart, or you can even go to a monthly if you want. But let's go to a 10-year weekly chart and talk about some bigger levels here. Now, the sell-off, this seems so long ago, but in 2022, we dropped over 30%. You know, huge moves out of COVID. We came full, like, this is COVID. Look how small of a sell-off that looks like. I mean, that is absurd that this is COVID. And then this was the post-COVID heavily stimulus induced rally, and then we pull back, you know, from high to low. We were down 37%. 37%. That's a huge pullback. But this one seems like a bigger deal right now because the structural shift. I would not be surprised whatsoever to see another 37% pullback, and realistically, the possibility of us holding the next traditional from the lows. Traditional to target, we complete targets. This is the next halfway back. For us to trade this at some point this year would not whatsoever surprise me. Now, of course, I do think we're, like Perry said, we can remain oversold for a long period of time. And I don't think we're at profit targets of shorts, but that does not mean, you know, new buyers would be stepping in on that necessarily. There is a extension here that has a 17,690 support level. That could trade today. But on the higher time frame, you know, these are the levels that I'm looking at, and this is the first move down that's completed. If you go back to the sell-off of 2022, this was the first move down here. It was a lot slower. We had this halfway back short to target. This is a weekly setup. It took from the point of entry, which was in March. The completion was in May. We then had our next traditional that first traded in August, and then we actually never completed that move. But we did make a new low. We just never got to that negative 23% profit target. Now, we will get that next short setup in the future, and that'll definitely be something to pay attention to, because it's not until we break higher time frame short setups that the next bull market will begin. But we are clearly in a bear market. I think, let's see, from high to low here right now, well, I guess to the low, 20% in the overnight session, high to low. So we officially have our quote-unquote bear market 20% move lower. That's how they calculate it. And then just another thing I'm going to be looking for, like when we get to these levels, looking for fair value gaps that line up with halfway backs. So like you see out of this low, you know, we run into some higher time frame profit targets. We have an ATR down. We have a fair value gap. That fair value gap single print is inversed. And then we have a traditional to target. Okay, and then we put in a fair value gap long, which for lows, I like to see a fair value gap lower that's inversed, and then a fair value gap higher. And then you can see we began a continuation sequence from this low, traded two targets. This right here is going to be your next measured move. I was talking, but that just traded. I mean, these also, once again, these ATRs, 5-minute chart, 138 points. It's 920. Okay, and of course that's multiplied by 1.5. But these ranges are insane. They're just violent, large. This normal 5-minute bar that just looks like a very average on my screen is 57 points. Okay, these ATR bars, 163 points here where my mouse is. This one, 177 points, 5 minutes. 181 points. 204 points, 6 a.m. this morning. Wild, my goodness, 6 a.m. this morning. Absolutely huge sell-off. So, yeah, just, be careful. Okay, be careful. I definitely was not careful yesterday. Just kind of over traded and caught a short finally at the end. But there's a lot. The moves happen very, very quick. Moving on to the ES. Little easier to see the short setup here. We have completed it. Higher time frame target completed. Double ATR down. Double ATR down into the negative 23% profit target. 500 or 5,307 was that target. Now, once again, we're very quickly through. We're opening below these targets. The daily sequence is going to be this low from the 13th of March to low, okay? And I bet we trade this and run it down again. If not, we're going to eventually roll up into that next full traditional from the high. But, I mean, this is literally textbook. Halfway back short, traded on the 25th of March. Downside target completed 2 weeks later. Pretty impressive. The next higher time frame target would be 5103. 5103 would be that next negative 61, and I can see us really going there before we're capitulating. This is a huge move down for sure, and longer term, probably a great buy point, but that means nothing today. We are still aggressively in a downtrend, and it's going to be interesting to see if this bid continues right off the open. Remember, this whole move has been overnight. We closed on lows yesterday. I would like to see us at least get up to that, the lower mid here, and the extension line up within what will be an ATR. The ATR is 35 points here in the AES. It's huge. 35 points. Are you kidding me? Like, wild. So 53.59 is going to be that daily extension, and then you're going to have that lower mid at 53.50. So that's going to be my morning trade plan. Just paying attention to these higher levels, and then really, if we get up to those levels, I'm going to be looking for inverse fair value gaps or something where I can tighten my risk, because these ATRs are huge. Like here, like I said, lows. Got your ATR bar down here, 41 points casually at 7:30 in the morning. We reverse that. We get above it. We trade this halfway back long, runs the target, halfway back long, runs the target, and then that next measured move from the lows of 805 to high, we've just traded here. We'll see if they end up completing, and then if whenever this series breaks, flipping on that and lining up. But you definitely want to see multiple levels of reasons to enter in any of these small trends and pick. I mean, if you want to trade, pick 2 trades and then be done, or 1 trade and then be done. I think that this market is too volatile to be over trading. So I'll share these levels with you guys in the room, and everybody have a great week.